Hello, and welcome to another update video on Bitcoin. So Bitcoin has recovered over the last few days nicely, but we remain below the resistance area that I explained, or actually that I highlighted. I think last Saturday we put that one onto the chart, or Friday even, after the price formed that low in the area around $103,600. Yeah. This October low formed, and the market since then recovered around 10%, but reached that resistance area, got rejected, and now we're on our way to the resistance area again. Now at the moment the market participants are very nervous. I showed you the fear and greed index in the last video update as well. It just shows that participants are still fearful. People are also bored. Fear and boredom, they are the two characteristics or emotions that you can often find in a fourth wave. And again, we could be in a fourth wave. That's our white scenario. I explained that over the last few days again and again. That is a corrective pullback from an Elliott Wave point of view, and a fifth wave to the upside could basically be unfolding. A fifth wave to the upside could be unfolding, and the fifth wave is basically the wave that could send the price to new highs. Which, well, is still expected, I'd say. We talked in the previous videos extensively about the warnings that need to show up for me to consider that we're in a bear market. I haven't seen any of those yet. And we could get another high. However, I have to say again, we are probably quite close to a bull market top. We are in Q4. I know there are people who believe in a super cycle or something, but again, they don't rule out a correction either before that happens, right? So, I mean, what could happen is that the so-called bear market might just be shorter this time than it usually is. Usually it's around a year. It might be shorter. But either way, there is just not enough of a correction to confirm that we have topped. And we need more. We need at least a break below that 55-week exponential average. We talked about that. That's here at around 98.5K at the moment. But the wave count to the upside is already full. So that's why we are already in an area where I think it's important to be on the side of caution. But caution, being on the side of caution doesn't mean being bearish. Now, there are a lot of people who tell you that because on-chain indicators, historical cycle indicators, like those who show, those that show overheated zones, they are not giving us an indication, right, that we have topped, and because of that the market has to go up further. That's not the case, but one of those indicators, for example, is the MVRV Z-score. This is an indicator that is, for example, accessible on Bitcoin Magazine Pro, one of our research partners. It tells us where Bitcoin stands in this cycle from an on-chain perspective. Now, this is the regular MVRV Z-score, and it shows how far Bitcoin's market value is above or below its so-called realized value. Basically, how much profit or loss the average holder is sitting on. Historically, when this metric goes deep into the red zone, like in previous bull markets, blow-off tops, and that's the orange line here, basically, that's the Z-score. When that happens and we go into that red zone, then it's a sign that the market is overheating, like we saw at the tops in 2017 and 2021. Now, we're far away from that, right? And by the way, whenever this hits green, I mean, that is time to buy. I mean, I'm not telling you to do that, right? It depends on you, but I'm going to do that. I'll tell you that when that happens again. And there is also the so-called short-term holder MVRV Z-score. A lot of people don't even know that there is a different one. And this basically zooms in on newer coins, or coins that moved in the last 5 months or so. That gives us insight into how active traders and short-term investors are behaving, like the ones who tend to drive the final phase of a bull market usually. And here's a key point. I mean, both of these metrics are still far from those extreme levels and the levels that we've seen in previous cycles. We're not seeing that euphoria that usually comes before a major top, or that historically has come before a major top. And again, that suggests that this cycle might be unfolding a bit differently. could be more extended, maybe, yeah, but maybe just slower in momentum. We know that there are diminishing returns, like in every cycle, right? That makes sense also from an Elliott Wave point of view, because I explained it many times in previous cycles. The tops were third waves. This cycle is a fifth wave, different market sentiment. So it just means that the structure develops a little bit differently, yeah. And when we don't have that overheated, let's say, momentum or sentiment, altcoins just don't perform that well. So this year, what we see here on these indicators, it's pretty much consistent with what we see from Elliott Wave structure. Like we're in the post-halving year, which historically can produce another final strong rally, but the data doesn't yet show a blow-off phase. So this, I mean, it could be one of those times where maybe the cycle extends a little bit, maybe we just don't get that much overheated. Yeah, I've always said that throughout this entire cycle, we may never see those overheated readings again because we're forming lower highs each cycle, yeah, on this indicator. So maybe that needs to be adjusted going forward. I think it is very useful for buying, might not be so useful for picking the top. That's why I rely more on Elliott Wave. But it's still a good indicator to understand. So whenever that gets overheated again, that is the time to be on the side of caution. At the moment, just because this indicator doesn't necessarily show overheated, doesn't mean that the market couldn't top. Yeah, that's why we have Elliott Wave, which is the root of market structure, and it tells us a bull market might have topped already, but we need still see some further confirmation. So I'm not convinced yet we've topped, but I also don't expect a major blow off top in this cycle, and not to the same degree as we've seen in previous cycles. So bottom line is we can still go higher, for example, in that white count, and we talked about that in much detail in previous videos. On the smaller time frame, I have to say the market hasn't really done anything impressive today. So we have seen an initial reaction to this micro support area yesterday, which I shared, and the market pushed higher into resistance, but we need a break above $112,485 next, because Bitcoin isn't doing anything at the moment, to indicate that we're on our way to 117,611. That's the 100% extension, and that's just the next ideal target here for orange wave C. We could get another pullback into support, wouldn't be a problem, yeah, for example, in a broader wave 2 before taking off, but a break below 107,907 would be an indication that blue wave B has topped. I just don't see that downside momentum yet. But I think we might see a decision. We might see a decision tomorrow during the weekly candle close volatility. I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, make sure you also follow us on X for additional updates, charts, news, and much more. I leave a link for you guys in the comment section. Thanks so much. Bye-bye.